what are the tricks and techniques to handle such situations?
So cash flow management is a very critical subject. In fact, I say that entrepreneurs need to do two things effectively and very, very well. One is cash flow management and second is HR management, because your dependency on business is on your teams. So your teams need to be handled well. When I say handled well, they need to be trained well. They need to be made very well accountable. They need to be audited in terms of their productivity. And the entrepreneur should ensure that every teammate that he has in his team needs to get more and more productive by the day.
So this credit, how you should handle? Should we do business with credit or we should do only everything without credit? Is it possible?
You need to understand one thing, that when you give your products on credit, you're actually not giving product, you're actually financing them. Because they will sell your stock and not pay you on time and rotate business on your money. They are doing their business on your money. So it is dangerous.
So I think this is also very important to take care of the cash flows. What do you think on this?
Absolutely. You have to be responsible for every resource associated with your business. Whether it is optimally used or not, whether it is a real estate space, it might be a store, it might be a showroom, it might be your godown, it might be whatever. It might be your team. Every productivity needs to be monitored well.
So cash flow is a very important, concern for any business owner. Finance management or cash flow, and multiple parameters actually control the cash flow. So many people have a lot of profit or they have a lot of turnover, but when it comes to cash flow, they don't understand where the actually cash flow goes. So what are the tricks and techniques to handle such situations?
So cash flow management is a very critical subject. In fact, I say that entrepreneurs need to do two things effectively and very, very well. One is cash flow management and second is HR management, because your dependency on business is on your teams. So your teams need to be handled well. When I say handled well, they need to be trained well. They need to be made very well accountable. They need to be audited in terms of their productivity. And the entrepreneur should ensure that every teammate that he has in his team needs to get more and more productive by the day. Lots of time what basically happens is the entrepreneur fails to improve the productivity of the team and he hires more people than being required. So I'll give you an example. There is a digital company, digital marketing company that I know. They have a size of 60 people team. But the quantum of clients that they have should have been managed by only a team of 20 people, but they're using 60 people for them. So what does this digital entrepreneur do? Throughout the month, he's not busy in developing the business. He's busy in managing cash flow, because your cash flow is cut to cut. And when your cash flow is cut to cut, if even 20% of the clients don't pay on time, you're in a chaotic situation. A disturbed mind can never do effective business. A disturbed mind can never earn profits. All the time he's firefighting.
Correct.
So to avoid that, you really need to do these two things well. One is cash flow management, which is finance, and second is HR management, which is making your team more productive. When your team is productive, then your sales team will onboard more clients and your back-end team will ensure that all the clients are happy and satisfied. And when that happens, your cash flow is in place, it is in sync, and you're earning good profits. As an entrepreneur, you should not get involved with cash flow management. It should be a SOP, a standard operating procedure that should be in action. As an entrepreneur, your focus has to be client servicing, relationship maintaining, and increasing your customer base. That should be your model of business.
Correct. But, so another thing is that, like you said rightly, the mind is actually the problem in handling a business. So if a person is not able to handle people, or a person is not able to recover the money properly, then there is a lot of challenges. But at the same time, the challenge is that you have to take care of the relation of the clients also. So, because you have to work again with him, the most important part is credit that we give, 90 days, 60 days. That is a bigger problem. So this credit, how you should handle? Should we do business with credit or we should do only everything without credit? Is it possible?
So you need to understand one thing, that when you give your products on credit, you're actually not giving product, you're actually financing them. Because they will sell your stock and not pay you on time and rotate business on your money. They are doing their business on your money. So it is dangerous. When you try to recover money, they don't give you the money, they give you excuses. Then they start fault finding in your products. Then they start talking about your after sales service. They will do everything except making the payment. And then you come into a fix. As far as possible, try to do a product line where the customer has to pay you in advance. Forget about you giving a credit period. I know so many businesses. I do more than 20 businesses. None of my business has got a credit facility. The product has to be outstanding. Your margin should be smaller. Let the benefit go on to your customer of a better price that he has paid to his advantage. Okay, but you can reduce your profit margins, but do not take the risk of creating a credit system where your principal amount and your capital and your profit is within the control of your customer. Then you have to depend on your customer in totality. Also, we need to understand one thing. I'm talking about a personal experience which has just recently happened. In one of my businesses, we sell products, and those products are worth, single product is in lakhs of rupees. Okay. We realized that you can lose money not only for your own mistake, but you can lose money even if somebody else commits a mistake. How do you avoid that situation?
Correct.
What we learned is we installed a product in our customer's infrastructure. Let us assume that the cost of that product was 100 rupees. The cost of additional attachment on that product was only 5 rupees. And that vendor was somebody else. Now the vendor who had to install product which was worth only 5% of the value, he damaged my product, which is 95% of the value of that project.
Correct.
And because of that 5% mistake, my client refused payment to me.
Oh.
Okay. In money terms, it is a loss of 2.42 crores for me. When I say me and my partner, for my company. So now 2.42 crores would have had a profit of hardly around 18 to 20 lakhs. To earn that amount, I have to now lose 2.42 crores. For what? For somebody who installed a product on my product, jiska value was only 5%.
And to earn 2.4 crore, you have to do a business of 10 crore now.
Yes. Now to cover that
It's a loss of 10 crore.
I have to do a business of 10 to 12 crores.
Correct.
So that is another pressure on me. Now what is the learning out of this? The learning out of this is I have to take responsibility not only of my product, but it's a metal product. If somebody has to install something on my product, I have to take that responsibility also. So immediately we change our line of action in the company. So what we have now decided is that the additional attachments on my product will also be procured and installed by us so that my product is safe.
Yeah.
Now the question is the safety of my product. The client does not want to understand whose mistake it is. And always the bigger guy gets crucified. So the guy who installed product worth 5% of the value, uska kuch atka nahi, but we got stuck. So now we have to take overall responsibility. Now that is also part of cash flow management. Cash flow management is not only your internal challenges, you have to also look at external factors on what can damage your business or your revenues. So that is what we need to get aware of. So this is a real life on the ground learning. Now we then pacified this client because he's a huge client. The client is worth $1 billion.
Yeah.
Okay. So now we have pacified them, and now on good faith, when they realize what has happened, they are saying that they will give us more business good enough to cover the loss that we have incurred. But then that is again,
that
we have
is
to
still
pacify.
covering only.
It's covering only. It's covering. But still now then we are maintaining a good relationship with them. In the loss also we are serving them, creating services for them, after sales service for them. And the future, they will give us more business where we can recover the lost money. But then it's a pain. And like you said, to cover a loss of 2.42 crores, we have to do a business of 10 to 12 crores more just to cover up the loss. After that, we will start incurring profits.
Correct.
So these are challenges that should be seen in advance and then planned accordingly.
Correct. I think another cash flow challenge. What really happens is many times people don't calculate their quotations properly. They calculate man hours and other material, but actually when executing, something else happens and they spend more. Another cash flow challenge or the costing happens when you are hiring the team. If you are hiring a person and paying him suppose 1 lakh rupees salary, is he doing work worth 1 lakh rupees? Or are you hiring two people for that same job. There also your costing goes. And also, how long does it take for your recovery person to recover the cost? Because that also is another cost. So I think this is also very important to take care of the cash flows. What do you think on this?
Absolutely. You have to be responsible for every resource associated with your business, whether it is optimally used or not, whether it is a real estate space, it might be a store, it might be a showroom, it might be your godown, it might be whatever, it might be your team. Every productivity needs to be monitored well. It might be a distribution system through the vehicles.
Correct.
मतलब एक व्हीकल के काम के लिए अगर आप 4 व्हीकल्स हायर करते हो तो योर कॉस्ट इज डेफिनेटली गोइंग अप. सो एज एन एंटरप्रेन्योर यू हैव टू माइक्रो कैलकुलेट ऑल द एक्सपेंडिचर दैट्स हैपनिंग. एक्सपेंडिचर ऑडिट इज क्रिटिकली इंपॉर्टेंट. सो आई एम इनटू द रेस्टोरेंट बिजनेस. माय फाउंडर हु इज माय पार्टनर, every time on a daily basis, weekly basis, monthly basis, she has to get into the calculations of expenditure. Whether are we spending the right money? Is there any fluctuation in the procurement cost? Is there a fluctuation in the power bills? Because in a restaurant, power bill also is substantial.
Yeah.
Because air conditioning, large setup, so many lights, so many equipments.
True.
So it has to be monitored. Your expenditure eats up into your profits. Your customer will not pay you more, because he is going to pay a competitive price. In that, money saved is money earned. So you need to ensure that your expenditure is optimum. Your team size has to be the right size. Like for example, if a restaurant needs 40 people to operate, you cannot hire 70 people, because then you are actually burning your own profits. Your customer will not pay you more. Now, just because you are incurring more expenditure does not mean you will get more customers. That is market demand and supply game.
Correct.
So you have to control the resources which are in your control, and then do your business profitability. So you are responsible for that. So you have to keep auditing your expenditure. You have to keep monitoring the incremental growth in revenue that is possible, and then keep moving forward.
Correct. I think another these days, there is a concept of CFO also. So many big organizations can afford a CFO, but smaller organizations can have a outsourced CFO. So where he actually, checks that if you're claiming that your product has 15% margin or 10% margin, are all the expenses also managed? Because, sometimes the business owner is busy in sales or operations. So this kind of checks and balances of the every expense, that how much percent of my revenue should go into salaries, how much percent of my revenue should go into rent, how much percent of my revenue should go into operations. Those calculations are very, very important. So outsource CFO or a cost accountant is also a very important part.
So we have done that.
Yeah.
We have done that. So in the restaurant business that I'm involved with, the complete accounting is outsourced. At the end of the month, he gives us a report. If there is any fluctuation, he brings it to our notice.
Correct.
So he does all of that very, very effectively, and it's an outsourced activity. So he does it very professionally. So we get reports on time, because of which we take the right decisions. We start taking the right decisions. Wherever we are lacking, we start focusing on that aspect as well. So all the time we are aware with the details that need to be dealt with.
Correct. So it's like the cockpit, you should have all the numbers in front of you. Another, there is a management quadrant which says that, every fixed expense that you have should have a fixed income. And every variable expense that you do, you should be done by the variable income. So what happens normally, because of the challenges that they face, is variable income takes care of fixed expenses, and the variable income comes variable after 3 months, 6 months, 9 months. So every business should start a new product or service which will be a cash flow business, and the target of that product should be only the fixed cost expense of that month, and that also it can be taken care. So can these kind of products be also added, services be added to a business?
Absolutely. Lots of entrepreneurs, they have divided their businesses in a way where their fixed expenditure is covered by a fixed form of revenue from certain number of clients. And then there is fluctuating income. Then there is growth income also. Like you're growing, so new customers add income, some customers drop away. So that fluctuation keeps happening, but your fixed expenditure is always covered. So many years back, I had a very interesting conversation with the Honorable Shri Manor Joshi. He was also a very good entrepreneur, apart from being a politician. So he clearly mentioned one thing, that you need to have three types or three segments in life or in business. One segment where you're completely protected with fixed income.
Yes.
The second segment should have 50% risk and 50% safety. And the third segment should have 100% risk. In the third segment, suppose if you invest 20 crores, you will either make 60 crores or you will lose the entire 20 crores. That is the appetite that you should have to take the risk in the third segment.
Correct.
But your 100% business cannot be risky. You have to mitigate the risk in life and in business, where your fixed expenditure should get covered. Then you can have a 50% risk, 50% safety, and then you have a third quadrant where you have 100% risk, but great opportunity to make a game-changing profitable situation and a scenario. So if you operate it in this way, you are safe to a great extent.
So we're talking about cash flows and financial pressures. One of the financial pressure come from very hidden, thing. Many times people say my turnover is 50 crore or 100 crore. But if you ask them how many clients do you have, then they say we have only 4 clients, or we have only 3 clients, or we have only 6 clients. Now the pressure is increased because of this parameter, that all your business is dependent on very few people. So even if one client goes, then suddenly your business drops by 20-30%.
Yes.
So this, I think, should be taken care. So what is the solution to this, to have less pressure?
First and foremost, it is a very risky proposition to have less number of clients and your entire existence being dependent on them. So one of our common friends, Captain Raghuraman, he had told me 15 to 18 years back that you should never have a client who has more than 50% share in your overall business. Like you're getting a revenue of more than 50% from one client. Because if anything happens to the health of that one client,
Correct.
your health is going to be affected. So you have to be cautious and careful about that. At the same time, in the automobile industry, in the ancillary support services of the automobile industry, there are many entrepreneurs who have only one client and they depend on that one client. It might be a Mahindra, or it might be a Tata, or it might be a Bajaj, or whatever.
Correct.
So if anything happens in their business model, you can get completely eroded because your existence is completely dependent on one single client. Some of the smart ancillary business owners, what they did with the profits that they started making from that one client, they started investing it in other businesses. So rather than having more number of clients, they started having more number of businesses.
Correct.
Now they also divided that into two parts. They were operating additional businesses, or they were investing in other people's businesses like a venture capitalist and starting making profits from there also. So then now their dependence of life and their business is not only on that one client, but they have created parallel revenue sources from the profits that they created from that one client.
Correct.
So you need to strategically define and decide on how you can run your life and your business. So they mitigated that risk in a separate formula altogether. There are so many entrepreneurs who had 1 or 2 clients and they started investing in real estate, they started investing in mutual funds, they started investing in equity, and they safeguarded their wealth in that particular fashion and that particular format. So there are multiple formulas on how you can strategize your life and your business model. But doing that is very important. There are a lot of people who kept on replowing in the same business, which was having only 1 or 2 or 3 or 4 clients. When something happened to that main client, they got vanished from the market. So as an entrepreneur, you really need to mitigate the risk by these kind of strategies or formulas.
One more observation what I have, because of the why does the financial pressure comes. Many people are doing very successful businesses, but they block all their funds in fixed assets. So they have a net worth which is very, very big, but the cash flow is struggling because they have not created something. So there is a concept called contingency fund also, or you can have a buffer fund where your expenses of maybe 1 year or 6 months are in liquid cash. So people actually feel that any profit should be invested, but how to invest, that they are not very sure.
A friend of mine has a very successful formula. He invests 33% of his profits in businesses that he's not involved with. So he takes that 33% out. From that 33%, he has created a formula. X percentage goes towards buying real estate. So the EMI for that. Y percentage goes towards investment in mutual funds. Z percentage goes in investment in equities. So equity is 100% risky. Mutual fund is 50% risky, 50% safe, and real estate is
Safe.
100% safe. So he keeps on investing in that. So suppose per annum, if he's making a profit of say 10 crores, 3 crore 30 lakhs, he invests in other activities. 6 crore 70 lakhs, he invests in the growth of his same business. And he has been doing this for the last 30-35 years that I know him from.
Wow.
And it has been a very effective business model. So his numbers have gone changing, gone appreciating, and now he has built very powerful wealth for him and his family.
So the profit is also making profit.
So the profit is also making additional profit. So the profit in your core business might keep fluctuating, but since you have got distributed profits being reinvested, that keeps you on a very safer ground. As a policy, what I do is I get highly insured so that if anything happens to me, the family is protected. So if I've got say X amount of liabilities, so if I've got a liability of say 100 rupees, I'm protected to 500 rupees. So if something happens to me, there is a 400 rupees plus to the family. So without compromising the lifestyle, the life continues. Lots of entrepreneurs ensure, as entrepreneurs, it is our prime responsibility to take care of the people involved with us and to take care of the family who live with us and who are our family members.
Correct.
So that depends on how well you strategically plan your life and your business. So that needs to be done. It can be medical insurance, it can be life insurance, it can be your assets insurance. Even if I buy a nail, I get it insured. So I'm a firm believer of insurance, and insurance is only risk coverage, not a savings instrument. I don't indulge into money back schemes and terms like that. I go in maximum coverage for minimum premium to be paid. So that is how I cover it. So different entrepreneurs have got different formulas. You need to tailor make your formula. And for that, you can have conversations with people. Like this is a conversation going on. You might make some points and implement it in your life. Similarly, you can have conversations with people that are there in your life face to face and strategize and make a formula around it. So business is not about only operating that business. Business is also about how you are mitigating the risk of your life and the businesses that you are involved with.
Great. I think that was a fantastic discussion. If you like this content, please like, share and subscribe. And if you have any suggestions or any challenges that you are facing, please mention them in the comments and we both will try to answer those questions.
We look forward for your intelligent questions because intelligence is not answering the questions only. Intelligence is asking better questions. So you can do that and we can have an enlightened journey together.
Thank you, sir.